welcome to this edition of EMS Now Up Close. I am Eric Miskell with EMS Now, and it's my pleasure today to be speaking with Dale Ford. Dale Ford is the Chief Analyst for the ECIA, the Electronic Component Industry Association. I've actually had Dale on my, I've spoken to him before, but it's always been on a webinar where he was one of a couple of guests. But I thought it would be worthwhile to kind of spend some one-on-one time and really deeper dive into the data and the research he provides for the industry. So Dale, welcome. It's good to see you. Let me just allow you to introduce yourself and your experience in the industry for the benefit of the audience.
Great, thanks. Great to be here, Eric. Appreciate it. I guess I'll age myself a little bit by saying I've been engaged with following the electronics and the electronics components industry for 30 years now. I've been able to see the industry through many cycles, seen the incredible advances, and just it's been exciting to see what's taken place over these years. And I actually enjoy going back and looking at the history before I was involved with it. But I've been engaged with multiple companies, beginning with the early days of DataQuest, who was acquired by Gartner Group in their semiconductor organization, and then joined as co-founder of the iSupply Market Research, and I worked with that for 16 years, and really feel great about the types of, the groundbreaking types of research we were able to do there. And most recently, I've been now responsible for the market research at the Electronics Components Industry Association. I'm the chief analyst there, and it's been a chance to broaden a bit of my scope of coverage rather than just dealing with the manufacturers and suppliers of components, of particularly semiconductors and the OEMs. I've been able to really get much more better perspective on the complete supply chain, the value chain, including the distributors, the manufacturer representatives. So there's a lot of interesting work that we've been able to do in that area.
Yeah. And that's what I wanted to kind of dive into with you. You produce I think it's a monthly, the Electronic Component Sales Trend Report. Tell a little bit about that, what that covers, and maybe high level. I have the October one. You just told me that November one is forthcoming, so it's always a good read and a good update. But tell us a little bit about the history of that.
Great, yeah. The Electronic Component Sales Trend, I'll just refer to it by its acronym ECST. That is a survey. We actually do it both monthly, and then we also do more detailed look quarterly. But every month we go out and we survey distributors, component manufacturers, and manufacturer representatives. And we ask them a series of questions. First of all, we ask them about their opinion on growth or decline in individual component segments. We ask specifically about semiconductors. We go down to the level of capacitors, inductors, and we ask about electromechanical components. We ask how they feel growth has been in the current month compared to the prior month, and their expectations for the coming month compared to the current month. But we also ask them their views on performance of various markets, whether it's the industrial market, mil-aero, medical, consumer, et cetera. We ask about their views on what's happening with inventory, cancellations, product pushouts. So every month we're taking a pulse directly from the people who are on the front lines in the supply chain on what their view and opinion is of the market. So it's not an actual sizing, but it's measuring the sentiment of what's taking place out there. Okay. And then quarterly we do a survey, but we get into a little bit more detail rather than saying you see things improving or getting worse. We ask for ranges. Do you see it going up by 1% to 3%, 3% to 5%, et cetera? So we get a little bit more resolution on a quarterly basis, but it's been something that I think people have really valued, just to see, they get validation, I guess, on what they're seeing in the marketplaces. Should we say it's not just them? They can see, this is what the industry as a whole is experiencing, and it's focused, I should say, on the Americas, North America.
Okay. No, that's very good. Thank you. So let's dive. Like I said, I have the October report, or the summary, I should say, of that. And in it, I'll just go to one of the quotes that stood out. You write that the market is clearly on the backside of the cycle. Tell me about that. What underlies that?
Yeah. Well, as we know in our industry, the markets go through cycles.
Mhm.
We would love to be able to be in a continual up and to the right situation, but we're not. The history from the beginning of electronics and the components is that it goes through cycles, and typically these cycles last around 4 years, from top to top or bottom to bottom, however you want to look at it, in terms of what takes place in the growth. And we have been on a really strong upward cycle that has benefited everybody in this industry for well over 26, 28 months, as we've seen improved performance in the marketplace. But we reached the peak back in the summer, and now we've seen things cooling off. In fact, the cooling off has accelerated as we've moved towards the end of 2022. And so we've seen that measured both in terms of actual measurements that we take. If you look at World Semiconductor Trade Statistics, their data clearly shows that the quarter over the prior year, and the annualized growth rates, they're coming down solidly now. We kind of bounced at the peak for just a little bit, but now it's coming down solidly. And the sentiment that we're measuring from our ECST survey shows, unfortunately, a very, should we say, strong downside at this point. We saw a significant decline in the October survey, but November, I would say that the decline in some ways even accelerated in terms of sentiment. And in fact, in terms of measurement, the overall average for the component market, if we look at the combination of semiconductors and passives and electromechanical components, that overall average is now well below even where it had hit at the beginning of the pandemic. We saw a big drop in April, May timeframe of 2020, and then the strong rebound kind of peaking in, April, May of 2021, a year later. So we saw a great period, and then we saw things roll off a bit, but we still maintained a positive overall sentiment, which is anything above a 100 measurement in the index. Yeah. It stayed positive all the way through the summer of this year. But then when we went negative, man, we went negative. And the sentiment has gone very strongly down to where, the overall average is below 60 now, which is, very low compared to what we've measured, at least historically. And that's true for all the categories in the end markets. So, we are, both in terms of measurement and in sentiment, very solidly on the downside.
Okay. And those are impacted also, obviously, by non-industry specific issues like geopolitical issues and the inflation and the economic conditions. All of that has to, other than within the industry's own kind of dynamics, right?
Exactly. Yeah, we unfortunately, we don't live in a bubble. It is interesting. If you looked at the electronics industry up until the mid 90s, the electronics industry cycle operated fairly independent of the overall economy. But once we hit the mid 1990s and beyond, the cycles in the electronics and the components industries the turning points in those cycles started to align with the turning points in GDP growth rate. Mm-hmm. And so we most certainly are impacted by the economic cycle. And so, and not only are we impacted by the economic cycle, but then, as you say, the geopolitics, what's taking place in China, unfortunately, has a huge impact on us here in the Americas. And it's beyond just the COVID and the restrictions there. Now, such a high degree of such an unstable environment in China. We're all aware of the protests that are taking place. We're aware of major contract manufacturers that have been impacted by that in China. And so the geopolitical issues impact us not just in terms of um, uh, import-export restrictions or tariffs and things of that nature, which we've been dealing with, but now we're dealing with just such an unstable environment in geopolitics, in energy, and now we compound that with inflation and the rising interest rates and the Fed moving to
Mhm.
get inflation under control. So we're kind of a little bit of a perfect storm that we're facing right now.
Yeah. No, I get, but one of the elements that you do, and you alluded to it earlier, was the different industry sectors that the industry serves, right? So, and speak to some of that and what you're seeing. I think that automotive is certainly seeing an increase, especially with EVs and the amount there. Because of some geopolitical things, one would imagine that maybe military defense type electronics needs a lot of replenishment these days.
Yeah.
What are you seeing in specifically trends in those areas?
In the longer term trend, you're right. The industrial, the automotive, and in particular the mill aerospace segments, those are the most promising segments. However, the unfortunate measurement that's come out of the most recent data from October and November shows that the only segment where those who say that things are getting better compared to the prior month is now in mill aero.
Mm,
Even automotive and industrial now has uh, a strong majority now saying things are getting worse month to month.
okay.
Now, that's not a long term, you have to take that into account. That's not the long term perspective, you know, looking at, say, for the next 3 to 6 months. But that's saying right now, as I look at this month compared to the prior month and the coming month, they're seeing a slowdown. Now, there's some seasonality that's
Yeah.
going to come into play there. Obviously, you get towards the end of the year, and even in the industrial and automotive segments, you're going to see some seasonal weakness at this time of year. And so my expectation is we'll see some improvement in that just with the long-term strong underlying trends that we see in the automotive and industrial space. So I expect to see a turnaround on that, but just in the current environment, those have dropped down. But we're going to be in a much more difficult situation in the more consumer-oriented types of product categories, the smartphone categories, the computer categories, areas of that nature. Those are probably going to have a much longer period of more negative performance, I guess you could say.
Okay. And the one thing that struck me again from the October report is that the one positive aspect was the impact this is having on lead times, that lead times are down. Speak to that.
Yeah, that's the silver lining, or I'm not sure you could even call it a silver lining, but it's some kind of lining with a little bit of hope there. But yeah, in fact, in the most recent report that we did that we're releasing in November, what we see is that uh, almost nobody sees increasing lead times at this point. In fact, literally nobody in semiconductors report is seeing an increase in lead times. And we had roughly 50% saying they're seeing decreases in lead time. So that's the strongest, should we say, improvement in the supply chain in terms of lead times and what we're looking at there. So just that's a really positive outcome. And even in passes and electromechanical, maybe 3 to 4% and you still see increasing lead times, but well over 40% seeing decreasing lead times in those areas. And so you're seeing strong improvements in that situation. So that we're all very well aware of, the unprecedented. I try to stay away from that word, but you really can't do it in the lead
Wow.
time. It is unprecedented. We're not anywhere close to experiencing something like this before. But now we're seeing the hope that we can start to balance the supply chains as we've all talked about. We've got this strong imbalance where critical parts you can't access, and as a result, you can't deliver the end product. So now, hopefully, this is an indicator we can start working through this extremely difficult inventory issue.
Yeah. Yeah. And so there's then what opportunity that now the orders get filled and the backlog, some of it gets cleared out.
Certainly, the backlog should get cleared out. I mean, if you're looking at this, I mean, there's a number of positive things have taken place, including in terms of shipping and shipping costs. We've seen big improvements. Back when we were in the thick of things, we had reports of 100 plus ships stacked up outside of the Long Beach and Los Angeles harbor that they couldn't get offloaded and couldn't get going. And so, we've seen shipping prices come down. We've seen the actual shipping situation improve. The one worrisome thing out there, well, actually, there's two worrisome things I have to point to. One is, in fact, it's a top priority issue in front of the Congress right now is if we hit a rail strike, that would be a very negative impact. And so they're hard at work in Congress trying to avoid a strike with the railroads. That would impact, everybody across the board, including the electronics industry. And then in addition, it's kind of like we've moved from sea to land. In addition, the trucker situation is a very difficult situation. And with new regulations that have been passed in California, again, all of these, the importance of the Long Beach, Los Angeles, Oakland, those ports, so important. But now the new clean air, what they call the CARB, Clean Air Resources Board in California, has now put in place regulations that is going to eliminate a large portion of the trucking fleet, which is going to be an extremely difficult situation when those start to take hold. So that's not a near-term thing, but as we look out over the next 3 to 5 years, that's the next worrisome thing on the horizon.
Wow. Okay. Listen, there's another report that you issued earlier this year, just a couple months ago, I think, that I wanted to kind of touch on, and that's your top 50 authorized distributor report, and it's a global edition. You just did that for 2022. I got a copy of that. That's been published. It's very insightful in many ways. Tell me about that and kind of the top line results, what you're seeing there. I mean, it looks like if I look at the overall revenues, it was a good year for the distributors, right? I mean, almost a 22% growth from the previous year I saw. So
yeah. 2021 was a fabulous year for the industry. We saw for the top 50 revenues grew from just over 147 billion to over 188 billion in 2021. So a great year. And, I guess you could say we were firing on all cylinders. Asia is key driver in all of that. Asia actually increased slightly their share of the total distribution market, going up to a full 75% of the distribution market goes to Asia. And of course, very strongly into China is part of that 75%. If you look at the Americas and Europe, they both lost just a little bit of ground. Next largest was the Americas with 13.6%, but not far behind was Europe at 11.4%. So a slight closing of the gap between the Americas and Europe last year. So both regions, fairly close in terms of size of the distribution market coming out of that. So when you go ahead.
I was going to say that to me that's interesting because we hear a lot of stories of reshoring, right? So manufacturing migrating from China, outside of China to other areas, Europe, North America, other parts of Asia. But what you're just saying there seems to indicate the contrary, that if most of the parts are going into China still, maybe that wave isn't as strong as we all suspect.
I believe, people have given a lot of lip service to the idea of reshoring, but everybody has been aware of the incredible hurdles that have to be overcome in order to do the reshoring, or as Janet Yellen's preferred term, I think, was friend shoring, something of that nature, where we sourced products from friendly countries and didn't have to deal with the negative, the collapse of the free trade environment around the world. Nobody benefited more than the electronics industry with the free trade environment. And now that we're seeing the barriers come back up again, the tariffs, the import-export restrictions, that's become reemerged as a major issue. So as long as we had that free trade environment, there was, in spite of the discussions, there was really no incentive, strong enough incentive to overcome those hurdles to reshore or sure shore, French shore, whatever you want to call it.
Yeah.
I think that's starting to change. And so we're not, and when I say starting, it's going to be like, turning a large cruise ship around. You don't turn it on a dime, right?
Right.
And in terms of that, I'm one who believes that this has to be taken much more seriously. And even with the CHIPS Act that was passed most recently in Congress, the intent of that to encourage more local semiconductor production in the United States, so we're not as dependent, shall we say, on Taiwan. Um, uh, that CHIPS Act, the investment coming into that is still dwarfed by the investments that are going to be made in Europe and in like places like Korea. So even though we pat ourselves on the back, look at what we did, all this money we're going to put into semiconductors,
Yeah.
we're just, we're still just kind of keeping up with everybody else. We're not making up any ground there. So I think there has to be much more discussion and much more exploration of what needs to take place, because the risk reward situation in terms of having to be dependent on Asia for so much, that calculation is beginning to change. And I think you're going to have to see people start doing more than lip service to that whole idea.
Yeah. And it strikes me too that, the role of the ECIA, as you told me, is really is related to the authorized channels, right? And
Yeah.
those ones. But if I think of China, I also think, unfortunately, of unauthorized channels, right? That there's a fair amount that happens within China that's been somewhat problematic in the past for people manufacturing there and having issues. So I'm sure that there's that impact going on too. But which raises the issue of kind of the role of the authorized channel, the distributors. And I think it's been a challenging few years for these people and for these companies, and relationships, I'm sure, are pretty strained with the customers they're providing. You had indicated that the ECIA is doing another study to take a look at this. Tell us about
Great. Yeah, just a brief humorous anecdote. You talk about the challenges of Asia. I'll always remember being in Hong Kong and going into an electronics store, and I mentioned that I was one of the co-founders of iSupply's market
that.
research, and seeing a modem on the shelf that was branded iSupply with our logo. We were a market research company, so I was quite amused at that. But anyway, yes, ECIA, our role as an industry association is to champion the benefits of the authorized supply chain.
Mhm.
And so, in doing that, our members come from authorized distributors, manufacturers, and manufacturer representatives. Uh, 20 years ago, there was a study that was commissioned and conducted by Texas A&M, their industrial distribution school. And that study was focused on the value of the authorized channel. And it was a very important study at the time, went through and both did a qualitative and quantitative view of the benefits of the authorized channel. Obviously, a lot has changed in the past 20 years. And so coming into this year, our board of directors authorized the commission of a new updated study, really not just updated, but a completely new study to look at the value, not just of the distributors, but all of the participants, including the manufacturer representatives, the value that they bring in that authorized channel. And so Texas A&M is conducting it once again. We have the professor who's involved with the original study leading this updated study. And it's a major undertaking. Again, it will have the first part will be a qualitative look, but then we're quantifying things as well, creating a calculator, as we call it, that will be available before this is done. But and this will go into much more detail about the value added services that have been so important, and the value propositions that have been brought to the market by the authorized channel. So that should be delivered some of the first results coming up here. And so we're looking forward to seeing those results come out, because we still are in a situation where we recognize there are challengers, there are alternative solutions out there with brokers and independent distributors. And it's important that we come back and put a spotlight on the benefits of working with the authorized channel. We've all been through very stressful times in the recent years, and so it's actually very good timing that this study can highlight the benefits of working with this authorized channel.
And I'm assuming that that will also involve the input from the distributors' customers, right? The manufacturers themselves and their perception of what's been going on and how to improve.
It's interesting. In many ways, the distributors, I guess you could say, who is their customer? Is it the component supplier, or is it the OEM company? That's one of the questions. And so a big part of what we're trying to do, excuse me, is really highlight the benefits of distribution to the component suppliers.
Okay.
Why it's to their benefit to work with the channel rather than going direct or working through other avenues. And so the interviews have really taken place more with the component manufacturers and representatives and the distributors, and looking at how they view the channel. The association does not include OEMs, and so we haven't gone to the OEM stage with this study, but it's still, like I say, still component manufacturers, still they continually face the question, do we go direct or do we go through distribution? And the study is intended to try and highlight the benefits and the importance of working through having a distributor as part of your model.
Right, exactly. And you referenced the OEMs, and in my mind, that's also the EMS, right? Anybody who's actually assembling components onto a board somewhere, right? And and I know, because that's the world I deal with. I just toured Europe and met with many of them, that there seems to be a little upset, I would say, with how things have gone over the past year or two. And of course, these have been unprecedented, to use your term that you don't like, but very, very challenging times that hopefully, maybe studies like this can kind of shine a light on some areas for improvement and ways of moving forward more effectively.
Definitely. When we go through a situation where there is a crunch in terms of availability of components, that always opens, in terms of companies doing the risk reward calculation, it opens the door for other competitors to come in, and the brokers and the independent players. And so as people become, stressed and needing parts, they will start looking to wherever they can get those parts, regardless of the risks of, potentially counterfeit parts, the risks that could come from, liability and everything associated with going down that path. Even being aware of those risks, I think that they make that risk reward calculation. And so when we go through a period like we've gone through, and the stresses that it places on the channel, definitely it opens up people looking at alternative solutions. And so it becomes important for us, again, like I said, to highlight why you want to work with the authorized channel, because I think that after what everybody's been through, we need to be reminded of that.
Right. No, good point. Thanks. Listen, I just want to hit two quick issues before we end here. First of all, do you see any hot air in the forecasts and backlog out there? This was an issue I came up a lot when I was touring Europe here over the last month and meeting with EMS. We always ask, how much hot air? Everybody, I got this backlog. It looks good. It's like, how much? And they all admit to some, right? So does the ECIA in your research, you get any kind of sense of that?
Only it's very difficult to quantify it.
Right.
The reality is that everybody would like to know. Lynn Terrell has been out championing what she's called the ability to decide what she calls true demand. And everybody in the channel struggles with that. Everybody's aware that you get double, triple booking activity that takes place. But I believe that some of that awareness has helped in this most recent cycle where, how should you say, it's fool me once, shame on you, fool me twice, shame on me. I
Yeah.
think that people in the supply chain, in terms of the orders they're taking and what they're committing to, I think there's been a healthy degree of caution in terms of how they've managed the order activity. So it's unavoidable that you're going to have some excess buildup with some of this double booking that takes place, and including some people who say, "Hey, I know I'm only going to get half of what I asked for, so I'm going to double my ask," right?
Right.
But they're onto that game too. So the gamesmanship that takes place in these types of environments, uh, I think that there's been some learning that's taken place. I think over time we've seen continual improvements in the efficiency and the intelligence in the supply chain. Our abilities in this cycle are better than the abilities we had in the last cycle. And the last huge, crisis we hit was around the Y2K crisis, when we had, catastrophic levels of inventory that had been built up. And ever since we went through that crisis, I think that we've continually learned and improved how we've managed this during these periods. And so, yes, we are going to have some uh, work off that we're going to have to go through there. But I think it's more a matter of, as we said at the beginning, it's rebalancing. You were able to get other certain components, but other components you couldn't. And so, hopefully, with this rebalancing, that net it will help with moving this thing through so that we don't have an overhang that will be a drag on the return of true demand into the marketplace like we've had before.
Okay. So then looking forward, what does your crystal ball say as we move into 2023? I mean, it sounds like we're on the downside of a cycle. I guess I'm expecting that maybe the top 50 distributors revenues may not jump another 20% here this next year as they did from, but what do you see as we move forward? Things are abating? And I like your term, the rebalancing. That's a good way to characterize it, I think.
Yeah, I believe, as I mentioned early on, these cycles last approximately 4 years.
Mm.
And a lot of people would like to say, gosh, by the time we get to the end of 2023, we're going to see improvement. History tells us that we're going to have to wait till 2024.
Okay.
That's what history tells us, and I believe that my personal opinion is that we're going to start to see, emerge from difficult times in 2024. I can't provide a lot of optimism for the coming year. Um, People think that we're going to recover from this economic situation much faster than what's ever taken place before. People say, "Oh, we're going to get inflation under control very quickly." But if you look at,
Oh,
people like Lawrence Summers,
yeah.
um, he puts out and refers to these charts that show, no, historically, once the consumer price index goes above 8, it's a long time for to get that back below even 5%.
Mm.
And so we're going to have a period where it's going to take a while to bring the interest rates down. And one of the interesting things that I shared some charts at our executive conference. One of the interesting things is, in addition to our industry aligning with the overall economic growth, you also see the role of inflation in this industry. And in the near term, when inflation picks up, you get a little bit of a near term boost in your growth and revenues with increased ASPs. But eventually, inflation reaches the point where it clips your wings. And we've now reached the point where inflation is clipping our wings.
Okay.
And so one of the things that has to take place is that we've got to get that inflation back under control. We've got to get investment, we've got to get the Fed rates back down once they've tackled inflation, so that you can get capital investment flowing back in as well. So all of these things flow together, that it's going to take us at least a year to work through that. So my expectation is we can emerge in 2024, but bu- buckle up for 2023. It's going to be a challenging year.
Yeah, no, I think that seems to be the sentiment that I've heard from a lot of different people in the industry. So that's, I mean, there's a lot of wishful thinking, but I think honest assessment is right in line with what you're stating. So
Yeah.
good. Um, Del, you are a wealth of information. I have enjoyed this very, very much. I mean, this is, and I think the audience will appreciate it as well.
Thank you.
And I will continue to watch the work that you're doing, and we should do this again sometime. I think this is time well spent with you.
Great. I appreciate the chance to visit with you. It's been a good time.
Good. Well, listen, if I don't talk to you, happy holidays to you as we head into December tomorrow, and look forward to following you and catching up again in the future.
Sounds good. Thank
Thank you,
you.
sir.